The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. I posted into Tiger TV today the chart of the QE2 versus the Titanic. You can see the difference. It's just a spectacular picture. This brings back memories for, not that I was on the Titanic. I would never be on the QE2 because I deathly abhor boats and ships. It doesn't make any difference, but this brings back memories because my daughters in 1988 they gave me a birthday trip with my girlfriend on a 8-day Mexican Riviera cruise through Mazatlan and Puerto Vallarta and Acapulco, and it was one of the nicer trips that you can take, and so I did that. I did that trip. The problem was we got caught into some type of a tropical typhoon, and those waves. I was on the top deck, and the waves were actually splashing my window. It was 7 days of hell, and when we were halfway through, which was it wasn't really that rough. It was rough, but not really bad. But when we got to Poco, I wanted to fly back. I said, let's just fly back. I've had enough. And I was talked into staying another 3 days on the boat. And then we got out to sea the next time. That's when it really hit. It was terrible. The only fun that I enjoyed on the trip was the going into the ship-to-shore radio. And it was $95 for a phone call. And I was trading soybeans, and so I would go up there a couple times a day and find out what the prices were. My broker was telling me where the swings were, and so I was trading soybeans while I was on the boat. It did okay, made a few bucks, and but it was a flight or the boat from hell. And the only other time I've ever been on a boat was on one of Tom's boats when they took us to a restaurant that's on the water there near where he lives, and it was a full moon, and it was supposed to be really glassy, and everybody said it was really glassy, but not to me. Those waves were still 8 to 10 feet high, and the boat was rocking back and forth, but I was the only one that was feeling it. I don't like boats, and I don't like planes. I don't like spiders and snakes either, so there you go. All right, let's talk a little bit about the market. Tom and I had a strong bet about the Treasury bond market years ago, and getting up around that 160. They finally got to 160, but that was after they changed the what do you call it, the specifications on the September contract, because the other one's still trading about the 150. Anyway, I'm going to post into a Tiger TV right now, the one that I watch for the indices, New York Stock Exchange Index. As you can see, we almost made the 7-6 retracement yesterday, only a couple points away from it. This is a really key cycle date. Yesterday we had a Bradley date on the 5th. This is the date that Bill Ehrman gave me 3 months ago to watch this date. It's a very strong cycle date. I don't think we can say that it's not, because it's been pretty much a straight up move since the 29th. So we're up 7 days now, and we're coming in very close to that 786. We came to the to the extremes of what we were looking at in the stuff on Friday, and I believe that we could still go a little bit higher, but we went right up into that 1980 level, and I believe that we could be if we get much above 1980, say at 1985, then most probably this is failing, and we're going to go up to the 2030 to 2040 level, and that would mean that this whole cycle that we're looking at for today is not going to work, and that we would be looking, at a failure here, and that would just go to the next number, which comes in right around November the 2nd. We have a smaller cycle due on the 14th, which is a new moon, and then we also on the 9th we have Mercury will be going direct motion. As you remember, it went retrograde on the 17th. September 17th, when the Fed did their first non-event, and so they're probably going to do it sometime this week or next week, is my guess, based on what the cycles are telling me. But I could be wrong on that. That's just my guess. We'll see what happens. The Dow Jones Transportations have really, they turned around really strong, and they've had a heck of a rally yesterday. We started up Friday. It also had a very strong level, and we'll be able to look at. I've got that chart here somewhere, but I can't find it right now. So I've got about 30 charts in here, and I can't keep track of all of them. So I'm looking to find out, where I can find it, and I don't see it right now. Hopefully I'll find it, but right now I can't. We'll keep an eye on it if I can't find it. But the transportations, they rallied. They haven't broke out of anything, but the main thing is the two things that I see is there's three. The Dow Jones. Let's just show you the Dow Jones 60-minute chart. Let me give you the where we were looking for and what it did, because the Dow, and it's only 30 points, which is hard to do 30 thinking there. So we'll see what happens here. I don't even, someone's asked a question if this is a Pesavento date or not. I don't even know. I don't have my astrological stuff here with me or not. I'm sure Steve Rhodes would know that, and he'll tell you on his program. And that date just means that usually, we have 10 planets spinning around in our cosmos for the solar system, or not the solar system, but where we are. And when several of these, the average number of aspects for one day is about 7. It's when you get days when there's 13 or more, or 14 or more, or 3 or less, that they act like magnets. If you looked at a bell-shaped curve, on the left-hand side would be 14 aspects, and on the right-hand side would be 3 aspects or less. Those would be the 98 percentiles, and so you don't see those very often. And what we did was we marked all those dates on the calendar, and then Neil Michelson from Astro Computing had given us, all the data points, and Jim Twentyman had all the dates from 1885, and we matched these, and we saw that there was a much, much stronger correlation to those numbers than you would anticipate if it were random. It was better than 75% of the time. It marked a good turning point in the stock market. So they do work. I don't know if there is one to do or not. All I know is this is a big date, cycle-wise. That's that's the bottom line of what I'm watching. So I'm primarily keeping an eye on silver and gold, because they got a chance here, to come busting out. All we need to do, I believe, is to get silver. No, silver's already taken off. It needs to, probably get above 1620 to really start to run. But the gold needs to get to about 1148 to 1150, and then I think it can, break out also. But they've been in a pretty good area here. We bottomed on Friday down at 1103, and 1105. The low being 1104 and change. So it looks like we have some type of a pretty good bottom in here. And some of these commodities, we're having a pretty good bounce here in the grain also. Not much, but a few cents here and there. But that's better than going straight down like they have been. At least gives the bulls something to hang their hats on. But they stopped going down a little bit. Copper has bounced a little bit. And of course, sugar has bounced quite a bit, and that's one of the reasons why I had such a strong interest here in the silver market, because I wanted to show you this sugar chart, because I don't trade sugar, but the what's happening with sugar is the fact that October sugar, there was very little sugar for delivery. And as you can see from this chart, we made a 3 drive to a top pattern way back when it was 13 and change. It went all the way down to 9, made a butterfly pattern down there at the $9 level, almost exactly at the 1.618 number, and then rallied up, pulled off the 382 over a period of days, and then the market gapped up, and over the last 6 or 7 days it's been strong. And the reason is the fact that there's no deliverable sugar for the October contract on world number 11 sugar, and each price is worth $11.20 a pound. So on a on a 100,000 pound contract, you're looking at each move is worth $1,020. So this moves pretty well, and we're almost up near this target here at the 1390 level in the sugar. We'll see if that will be enough to hold it. But we're having the same situation in silver based on what information I was given from Zero Hedge, which is a really good. They have some pretty good information. Most of the times it's pretty good, and all I do is I hear what they're saying, and then I look at the chart to see if the chart is confirming, yeah, this might be happening, and then that gives you some idea that this could be the reason for a move, because I never know what the reasons for the move are, and no one else does either. So that's what we have to look at. So we'll see what's going on with the market. But we have certainly had a positive bias after those numbers came out Friday. They were so very bearish, and the market just turned around and just spit in the face of the bears, and they ran up. But boy, it stopped at every single ratio you could ask for on Friday's lows. It was spot on. And there's a lot of things on the internet right now that people send me about how bad the report was for the jobs, that it was actually much worse and everything. Folks, that don't mean diddly squat. If the market goes up, you're short, you're still screwed. So you got to do what the charts are telling you to do. If there's more buying, prices are going to go up. If there's more selling, prices are going to go down. That's the bottom line. Hell, we see this all the time. We see it in crude oil. We see it in silver, gold, whatever it happens. Sugar, you always, the news sometimes it follows the trend. So by the time the news comes out, yeah, that's what's doing it. And who knows what could be happening is this report will come out with a revision and say, oh, instead of being 112, it was 312. And don't think that they don't do stuff like that, because they do. I've been involved in that in 1974 in the egg market. They came out with a report that was so bearish, I went out and bought a $2,000 coat that I couldn't wear. I got so sick of it because I lost 20 grand on the trade and never could wear the coat. I ended up giving it to charity for a reverse auction many years later. Okay, now we had a question for one of our subscribers who is involved in the chart of Apple, and I wanted to bring it up, take a look at it here, because we're coming into the break. I don't know if we're going to have a chance to talk about it, but we will cover this when we get back from our break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. We're looking at a chart of the E-mini S&P. We were thinking where the market would be going. And as you can see, we got to the top end of that range. We were only a couple points away from it. All we could back off from there overnight is we hit a high of 1979 and change, and we went down to 1963 and change. So dropped 16 points, and we've now taken all of that back, and the market is trading at 1976.50, right near the high. Now, it would not be unusual to see the market take out that high for several different reasons. First of all, I don't know if it means a great deal, but the Dow Jones Industrials E-mini contract has already taken out the highs for the, we'll see. The chart that I posted into the room there is actually the one that I brought in early in the morning yesterday, because that little red box is where the zone was, where I want to see what was going to be happening as far as resistance levels, and it extended from 1956 on the low end to 1979 on the high end. And the market went exactly to 1979.5. Now, we could take this out without too much trouble, but if we get above 1990 in the S&P futures, I mean, there's really nothing to hold this thing back. We could go, a lot farther, and we'll see what could be happening, and we'll see what happens. The Nasdaq is lagging a little bit, but it doesn't really we'll see how that thing moves around, because remember that NASDAQ is really only 10 stocks. When you add them up, we'll see what's happening. And the start, like I mentioned, the chart of Apple doesn't look that bullish as we posted it in there. You can see it's had just a very, very meager rally here, and we'll see if it's going to have much of a correction at all. I don't know where Apple is trading in the market, but we'll see. The biotech index also didn't participate yet. It was down also. Some of these stocks that have been the darlings of the bull market certainly faltered a little bit. So there are a few chinks in the armor of the bulls over these last few days, but very little. The breadth of the market, so basically Apple is unchanged pretty much, but the overall breadth of the market actually improved slightly yesterday, as you would expect with the market being that strong. We, for the first time in a long time, we didn't have any new lows versus new highs, which was really quite amazing. But the market had very oversold on that end, so you can expect to see what's happening. Someone's asked me to bring in the chart of Apple, and I'll pull it up here. I have it trading at 110.78 is where I see it trading right now. Hopefully, that's where it is. But we did stop at a 382 retracement on the down move on Friday. But the market's only rallied $2 a share, where the rest of the indices have gone, or the rest of the NASDAQ stocks have done, much better. As a matter of fact, you can see from the high that we made at point A to the low that we made down at point D on the 24th. Apple rallied back to a 61% retracement up at 117, and then sold off $10 a share down to the 108 level. Now we're trading at 110 and change. It hasn't bounced as of yet, but that doesn't mean that you can't. The thing that's interesting about Apple here, and I have it written on the chart there, is that everybody that's bought this stock since the beginning of the year is underwater, except for the people that bought it on the 24th of August. And other than that, it's been in a downtrend, and a pretty substantial one since the high that it made back on April the 13th. So we'll see what's happening. Now, remember, in the Dow stocks, we have DuPont is one of the stocks in DuPont. And remember, they are, we've got a call. Hey, we've got Mr. William Liu from Singapore. William, are you there, my friend?
Yes, I'm here, Mr. Larry Pesavento. How are you?
I'm good. What can I help you with?
Okay, I'm actually looking at oil, today, the oil futures. I'm thinking that is it, likely that we already see, a possible bottom for oil, so that we can long oil from now on?
You're talking about crude oil?
Yes, crude oil.
Yes,
and,
I think there's a really good chance of it today, because the reason why is what I was trying to buy some this morning, and I did when it got down to just a little below 46. And the reason why I did that was that it took out the previous day's low, and there was no selling. That was basically what I was looking at. William, could you stay with us, please? We have a commercial, but you'll hang with us, right?
Sure.
Thank you, William. Yeah.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we got a little bit of a rally going in the market. The Dow's up about 40 points. The S&P's up about 2. The Nasdaq's up 7. So we're getting a little bit of a bounce here early this morning, not to be unexpected. In fact, I wouldn't be surprised to see us make a slightly higher high than we did yesterday, which we've already done in the Dow Jones. We haven't done it on the S&P nor the Nasdaq, but it's still early, and it'll probably do that relatively soon, would be my guess. And we'll see whether it's going to be another big up day or not. But if we get above the 1987 to 1990 level in things, you'll be able to see, you'll see that you're looking at something pretty dramatic. We've got gold and silver rallying here pretty good. And oh, Bill, you're still on, Bill?
Yes.
Bill, I'm sorry, Bill, but during the break, I had to call my daughter. Today's her birthday, and I got my train of thought. Yeah, she's 47 today, and she's on call from medical. She's in medicine, and she's on call at an Indian reservation in Bismarck, North Dakota. What can I help you with, my friend?
Oh, I was, asking you regarding the oil future, the crude oil. And
Yes.
you mentioned that you this morning you went to buy the crude oil.
Yes, I thought that, we've been in that same trading range for a while, and we went below the previous day's low, and it didn't go down. So there was no selling there. So as soon as it got back above $46 a barrel, I said, well, I could buy it here and not risk very much, and so that's what I did. And it's so far it's turned out okay. But where it's going to go to, I'm not sure. I remember you sent to me last week that you were buying wind down there at the bottom. You really hit a home run on that one, didn't you?
Yes. Oh yes, I bought it last Friday, and it's still on the downtrend. But I'm thinking whether this could be the end. I mean the bottom of wind, and you mentioned to ask me to get a stop loss, which I did. So far, I'm quite fortunate that I was off stop out. Yeah.
Good. Well, it's worked in your favor quite a bit. It's been one of the biggest movers here these last few days.
I'm thinking of longing, the crude oil because, we have some big institutions like Goldman Sachs. They were pretty bearish about. I couldn't remember if Goldman Sachs or Morgan Stanley were quite bearish about crude oil, and so I just don't want to, go in the opposite directions of the big institution. So I thought maybe I should ask you for your advice.
Well, I don't listen to what they say, but I look at the charts, and we've been in a really strong consolidation in the oil. The fact is, I'll post it in here so folks can take a look at it here. In the oil over the last month, we've been somewhere between 48. Oh dear, I got a little mess up here. Hold on a second. I have to check something, William. Oh, what did I do wrong? Oh, I know what I did. Hold on, I hit the wrong button. There we go. There, all I got to do is back to where I'm supposed to be, and I'll be all right. How's everything going in Singapore? Everything's just fine?
Things are fine. It's just that recently, the last 1-2 months, we have a very bad, weather due to the haze caused by, the forest fire in Indonesia, and it causes a lot of problems, including Malaysia. You practically cannot see a clear sky, and everybody most of them will have to put on the mask, as it has been termed as very unhealthy air. Yeah, so I'm thinking of maybe going to Hong Kong at the end of this month to breathe in some fresh air.
Yeah, well, that's true.
Realize,
you don't have any forest fires in Hong Kong, that's for sure.
Yeah, so now we realize the important and pleasures of the fresh air.
Tim, I know you travel to China quite a bit, but the folks that don't travel like you do and I do over there don't realize how bad it really is until you get to a place like Beijing or Shanghai, where you literally can't see the sky for days. I mean, it's so bad that it's you can't really breathe.
When will you be going to Hong Kong? I'm hoping to see you.
Maybe. Well, we have a wedding in March. Sarah's youngest son, Ernie, over there. He's getting. So we're probably going to go there. And we're having the wedding is going to be on an island off of Thailand. So we're going to. We're probably going to be there for about a week. So if we get there, we'll try to get together.
Yeah, I'll be there. You just let me know. It's quite easy for me to get there, whether it's Thailand or Hong Kong.
I would certainly look forward to seeing you. Thank you for calling in, my friend. I appreciate it.
Yeah, thank you very much.
You bet. Okay, folks, one of the things that we talked about that someone has asked me about over the last day or so, considering all the action that we had this Friday, is the bond market. Because, when we had this big run-up on Friday, the market got up to 160.20, which was a 786 retracement off the high of August 24th. And now we've backed off. We're down to we got down to the 157 level, which is the equivalent of a 3-2 retracement of this move. And as long as the bonds can stay at this 157 level, they still have a chance, for some more rally. But anything below that, they're going to be looking at something, a lot less would be my guess. So we're having some pretty good activity this morning with the market going back and forth between unchanged and positive, at least in the NASDAQ and the S&P. The Dow continues to, forge ahead. We're up 44. Part of that, of course, is DuPont. They have a new CEO. The lady that was running the business, evidently they blamed her for everything, with the exception of the bubonic plague. And now they're going to bring in someone to run the company that's never going to make any mistakes, and so the stock is up 11%, and that'll help move Dow a bit. We've got gold is made right up in that area of stiff resistance at 1148, but silver is a penny or two at 15.99 in silver, folks. And we were mentioning that yesterday, the fact that it's acting so darn bullish, it looks like it really wants to take off. Now there should be a little bit of resistance up around 1620 in the silver. Let's just take a quick look at that, because we broke above that trend line that we featured in the letter this week, and that was the real key here, because we just took right off, and we've hit 15.99 so far today, and 1633 completes the ABCD pattern. Anything above 1633, 1640 or something, says that we could go, a lot farther to the upside. So this is going to be an effect on all of this. I don't know or not, but if you'll take a look at this chart on gold from yesterday, you'll see that we haven't updated it yet, but we're right up at, we just tagged that trend line. We're just on that downtrend line right there now at 1148 and change. So that's where that comes in, and if it pops through that, then we're looking at a pretty good move in gold, and that could even make silver, not that it needs any help, but it could be moving a little bit higher. But these markets are starting to move, pretty good. So we'll see if they continue to work in that direction. But we will be getting a lot of ups and downs in the move, with the Dow continuing to be up. It's up 54, NASDAQ down a point or two, and the S&Ps, basically they're up 2 points. So the big action is, of course, the Dow Jones, and whether the S&P hurt. The S&Ps aren't hurt, but the NASDAQ is hurt by several of the bile stocks that have gotten whacked pretty hard. One to the tune of about 19%, another one to the tune of about 22%. So that affects them quite a bit. But the Dow Jones has continued to charge ahead, and that, like I mentioned, is due to DuPont. But remember, the Dow Jones is it's price weighted average. It's not a cap weighted average. So even though DuPont has a large capitalization, it doesn't have the same weight that you get with IBM's. So that's a big difference. And IBM is still acting okay. So we'll see what's going on with these. Anyway, the transportations is also up a little bit, which is a good sign. But I believe that today's going to be the key day, because this is a real key cycle day. And now we've made a higher high in the Dow, so that completes a higher high. The format that I was expecting. I haven't seen the New York Stock Exchange Index as of yet to see if it's made a new high, but I'd certainly be interested, in seeing it. Oh, we got crude oil pretty good now. That's good. That's what I like it to see. That's good. And we got the S&Ps up near high also, and we got nice moving wheat today. I'm here to check the New York Stock Exchange Index. Larry, do one thing at a time, and then you won't have any trouble. So we'll see here. We have not I haven't got the opening price yet on the New York Stock Exchange Index, but my guess is we're probably getting ready to go higher. Would be my guess. So that's what we're watching so far this morning. We're getting Canadian dollar selling off again, which I'm certainly happy to see that. Now we do have the bonds have gotten below the 157 level, and they can't get below 156.15. That would be the bottom end of that range of where they would have a move starting. So you've got to be able to keep that into into your formula to say that if it gets much below
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks. We're testing the highs in the S&P and S&P cash. We did make a slightly higher high in the New York Stock Exchange Index, which completes October the 6th as being a potential key cycle date. But frankly, starting this strong, just like we did yesterday, just means that we could go up and go, substantially higher. We've got the Dow still moving higher, up 65, points on the day. So that that's neither, that's in a class all by itself, of course. But keep an eye on that New York Stock Exchange Index, because if it gets down on the day substantially, then this would qualify as a potential, Bradley date and also an Erman date. And I feel very strongly about these dates. They don't always work, but, that's what I'm watching for today. Gold and silver have certainly performed well. We've got gold right up at that resistance at 1148. I think we're going to pop through that without too much trouble. Silver was 1 penny away from $16. We're now trading at 15.92. So all of those are telling us that we're hanging in there in these metals, because they certainly look like they want to go higher. Now tomorrow on the show we're going to have Bill Meridian from Trend Research out of Austria. In Austria, Bill will be visiting with us, and he has some really wonderful stuff. He alerted us to the fact that we were going to have a pretty nasty July and August, which in fact we did. So he'll have some new information for us that is very good. He's one of the premier researchers in the business, as far as I can tell. And then Tuesday, we're going to have Norm Winsky from Astro Trends, and will be our guest. And hopefully Friday or Monday, I'm going to have Rich Anderson as my guest to discuss cattle market that has been under tremendous pressure, and the fact that we're getting a little bit of a bounce in some of these grains. We got corn up a couple of cents today, and wheat at a nickel, and beans up a nickel, and so that's helping a little bit. We had a nice little run here of $1.20 a barrel here in crude oil so far today, which personally makes me happy, but maybe if you're short, it doesn't make you happy. But anyway, we'll see what happens. But anyway, watch the S&P. We go breaking through that 1980 level by a little bit, but we shouldn't close above there. That's the key, because this should be the date of the high. I feel really about this. We've been watching it for a long time. I didn't think it was going to be straight up from Friday, but that's what happened. And when we bottomed on Friday at all those numbers, you certainly didn't want to stay short at those numbers. And we were on the air when that was happening. Every single index, bottomed at that point. And now we're having this big run up into what I believe is a cycle high. And the key word there is belief. It's far from being, etched in stone, for anything to really look at. But the big thing is, we've come up here. We're making new highs now in the cash index for the S&P, which is good. So we should be following a new high in the S&P futures here very shortly, and we'll see if it's going to be one of those days where it continues to run up. I had a question while the power was out about these reports, and how people talk about the employment numbers, how they're changed, and how people they say the number of people that are out of work, that don't apply, that are not counted in the numbers. Okay, that's why I have to use charts, because that stuff confuses the heck out of me. I mean, it always has, it always will. I don't understand it. I have a BS degree in pharmacy, a master's degree in business from Indiana, and I swear to God, I still don't understand the economics of some of these numbers that they talk about. They just don't add up. When I look at what's happened quantitative easing, it just doesn't make any sense to me. So, but that's neither here nor there. So we've got a really strong market again this morning. Maybe it's going to continue for the rest of the day. We'll have to, wait and see. But we did make a new high now in the S&P. We made a new high in the cash, and we want to see if it continues. So if it closes low today, and we're only up 4 points in the S&P, up 5 in the NASDAQ, and up 75 in the Dow, which would be pretty hard to reverse that. But, well, it could, of course. But that would tell us that the cycle day would come in. So you want to see the market close lower, and then that would tell us that we're probably at that cycle high, that we're looking at. But if we close really strong again, it's going to keep going stronger, and we're going to get up into the area of maybe November 2nd before we come into another date, because when these dates don't work, it just means that they're being pulled up into another area. And just by looking at the Dow Jones, you can see what the Dow Jones is doing. But remember, the Dow Jones is only 30 stocks. It's a New York Stock Exchange index, which is the real index that we want to be watching here. and that's the key to be watching. And the number that I think is important here with the New York Stock Exchange Index, and I don't know if it's hit there or not because my numbers haven't reached, and that comes in at 10,188. So if we don't get much above that, that should be the end of this rally. And if we turn down from that level, that would be further indication that that's what most probably could be happening. But it's still early in the game. We've only been in for, less than 50 minutes, and we'll see what's going on. Anyway, live every day in an attitude of gratitude and may God bless. And please, if you have a chance, do something nice for somebody that has a lot less than you today. May God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.